All right, hello and welcome to part 10 of this mini series of trading problems, which I've kind of compiled together throughout the years. And if you're new to the channel, welcome once again. My name is Meydan. I'm a finance professional, previously from Sydney, Australia. And I'm also a developer of the PST indicator, time, space, and motion, which actually gives precision price modeling in financial markets, and also the developer of the swing day and swing hour models of mathematical cycling with a fintech company which I've started in 2020. Now, this video is going to be the longest one, but it's really, I think, in my opinion anyway, it's the most important one because it involves a lot of the problems that we go through at a personal level. And all the problems I'm going to mention in this video are, I'm just going to put them in one video, but it's all, very, very personal things, that people go through. So hopefully you'll enjoy it. And hopefully if you've been trading, you'll probably resonate with a lot of stuff. And as you know, I'm always looking at problems and their solutions from a time and price trading perspective. This is not going to be any different. I'm just going to look to solve all of these problems from time and price methodology of trading, because this is actually all the things pretty much I went through, and this is how I came up with everything that I came up with to make life a little bit easier for traders. So without further ado, let's get started. All right, so this is item one for this video, which is at a personal level, and the first thing is isolation and loneliness. Now, if you're trading from home, I sometimes say it in the video as well, trading is a lonely business if you're trading from home. This could involve long hours sitting in front of the screen waiting for your setups to happen. And because it's a 24/7 market now, especially with the crypto, before it was just like 24/5, but now got 24/7 with crypto and all kinds of other instruments traded. Trading can be lonely. So this can cause a lot of problems psychologically and in terms of job satisfaction. So it becomes very important for people to tolerate it, and it becomes difficult to maintain some kind of social contact with others, which brings us to the second problem of lack of social support. Now, when you're in an office or when you're working with a team or a team of traders, it's good because you're talking and you're in this dialogue and you can bounce off ideas from one another and kind of like talk about the trades. But if you're like working on your own, trading on your own, this is just a big problem, because like you're stuck in front of the screen, and this could lead to many kind of problems, which we're going to come now in the other part of the slide as well. So this isolation and loneliness is something very, very important, because this is actually a trigger and can lead to other problems that are coming up right now in the next slide. Right, this is one of them. Imbalance in personal life. Now, this could really strain your relationships, because I know I've been through that strain myself, because being a finance professional and working at an office or working for a company is really different. It's just different. When you're working from home, it's a different ball game. First of all, you got the stress of trading. Okay, trading is not an easy job. It can create a lot of stress if you don't know what you're doing. All right, so it can create a lot of stress on your personal relationships. So if you're married or if you've got a partner, you're living with someone, you've got kids, long hours, can lead to all kinds of family disruptions. It could really reduce your contact with your friends and your relationships. So this work-life balance can be disrupted if you're trading and if you don't have a routine and approach which you haven't fixed. And there's guilt over the time spent. Why? Because you're under pressure, right? You're feeling like you need to work, and because we're like used to working 9 to 5 or a daily job or whatever, we feel like if we're not in front of the screen, we feel like we are not working. So this leads to actually unproductive work. We're like sitting in front of the screen and we're telling ourselves and everybody else that we are working, when in fact we are not. So in order to solve this imbalance in personal life, I've brought into the equation time. What day is a good swing day possibility? The highly likely of a good swing day this week. When's that going to happen? In those days, what are the likelihoods of the market turning at specific hours? and pricing. So these three things were for me like really, really important, because I said to myself, I can't live like this. It's a 24-hour market. And also imagine living in Sydney, right? Like, you are so away from London and New York. It's like your hours are like in the middle of the night. So it was just very, very chaotic indeed. Obviously, right now I'm not in Sydney. I'm on the Mediterranean coast in a nice city called Antalya in Turkey. But at the end of the day, no matter where you're trading, even if you're trading in New York or London, doesn't really matter. Staying in front of the screen, not knowing what is a good day, not knowing what's a good hour, not knowing, the price range, where should I get in, where should I get out, all these things can cause a lot of stress, and it will screw up your life. I've been through this, and if you're new to trading, I would be very, very, cautious in creating this balance in life. You really need to do it. You need to take care of that, and be cautious that you're not, all of a sudden being grinded with this workload. And then over time, you're going to feel guilt, over it as well. So that family time is going to, cause stress. It's going to really drain you out. So keeping this balance in personal life is very, very important. So the approach to your trading, the strategy to your trading is very, very important at this time. Now, the next topic is mental health issues. Now, I haven't seen anybody in YouTube discuss these things that I'm discussing right now in this video, but trading can really take a toll on your mental health. It can cause chronic stress, especially if this is the only thing you're relying on and if you're not well funded. Secondly, it can bring burnout, which will cause depression and anxiety. The market is very volatile, as you can imagine, or if you're in the market, you already know. So this constant decision making, this constant volatility, everything going up and down with, politician statements, the governments are changing. Now we've got the tariffs and all that kind of stuff. Wars going on, natural disasters, whatever you're trading, market is always going to be volatile. And this creates a lot of stress, even with people who work in investment banks in Wall Street and so on. And you'll often hear about their stories and how they use drugs and so on to kind of, get out of this mental stress. So this causes also burnout, because you're constantly being on the market. You're always trying to make a decision at the right, price. Should I get in? Should I get out? What am I do? How am I going to manage it? And so on. So without proper planning your trade, without proper understanding of time, price, when to trade, what days are good, in fact, what swing days are the major swing days, and what swing days are the swing days within that specific week, and what hours in that day are good, can really reduce all of that, because you can just plan out your whole month and say, I'm going to just look at the market at these days and that's it. I'm just not going to do anything else. That gives you a lot of time to do other things and create some balance in life. Also, depression and anxiety, because you could get, with stress, extended string of losses. So all of a sudden you might have like 3, 4, 5, 6, 7 losses, one after the other, and you're all of a sudden beginning to now collapse. Your strategy is under question, and you're thinking, what am I going to do now, and so on. So depression and anxiety happens a lot with traders, and it's really something that every trader needs to take care of. And this again falls back into a solid strategy, into a solid, consistent approach, like doing things in a specific way which you've back tested and and it's keeping you out of that emotional turmoil. And also looking at the screen all the time, kind of like with the market going up and down, your emotions are going up and down as well. So you need like a approach where you're very minimalistic but accurate in your approach to the market, and it's very systematic and plain and straightforward. Okay, number 4 in personal problems: addiction to trading, compulsive trading. This is like a big deal, and chasing losses. Now, because we're used to working in the office, like I said, a while ago as well, that we feel like we need to work every day and, 9 to 5 at least, but this is completely wrong. You have to trade at the right time, at the right price. Sometimes they say be at the right place at the right time. So at globaltrader.club, I like to say be at the right price at the right time. So does it match our swing day? Does it match our swing hour? Is this a good PST level? Is it a good price to trade at? Once you have those, then you can't be addicted and you can't be chasing losses, because that's the only time you can trade. Because if you're trading after that, you're going to get yourself into problems and into dramas, because then you're trading on an emotional rush and you've kind of like completely left your system aside. When you have more than one variable like price and time, it's like you're walking on two legs. So walking on two legs, walking on two principles, then you can work on it. Will you have losses when trading with price and time? Of course you will. Certainly you will. But you're only going to be matching it and trading it at a certain price and time. More often than not, your trades will be successful, as I've posted on the trading challenge as well. I had like 67% success rate on that account that I did. And that was like, taking the account to a quite high level from a small account as well. You can work with the small account too. But the important thing is to understand the time and the price correlation rather than just looking at one setup, and also taking into account a decent technical analysis approach. Okay, that will get you out of the addiction. You have to look at trading like a business opportunity. Is there an opportunity for me? Is there a setup? If yes, is it a swing day? If no, am I following a swing day like from yesterday to join the trend or to join the move? Okay. If yes, then do I have a swing hour which matches my setup price? If yes, then you got time, price, you've got to follow up on the swing day, or you're trading on the swing day. Then you're not chasing anything. You're just simply bringing things together. Now, this next one, number 5, at a personal level problem, is financial stress. If you are risk exposed, if you're risking a significant portion of your savings, then obviously you're going to be in stress. This comes down to proper money management. And the way to look at this is, how can you minimize risk and maximize profit? And your strategy needs to answer that question. Otherwise, you're going to get inconsistent income, which is also going to drive you nuts. Okay, because then you don't have a consistency, and you can't plan or do anything, or you're always like living on the edge. It's like you're feeling like you're walking on a rope all the time. So arranging your risk exposure and also reducing the inconsistency so you can like flow with a consistent approach is very, very important if you want to reduce your financial stress. This is once again where time and price come into play. Am I trading at the right price level, at the right day, at the right hour? In fact, let's take a look at an example. Let's check it out. All right, so today is the 17th of April 2025. So this is euro dollar. Now you can see all the yellow arrows here that I've got, right? So all of these are swing days. And this week I had 2 swing days, Tuesday and Wednesday. And I said, because we're down, let me make this a little bigger so you can see it better. And because on Tuesday we were down, it was like Tuesday, Wednesday, we can like push up from the lows to go up. And in fact, that worked nice into Wednesday. But Wednesday is also a swing day. So I said today, because it made a high on a Wednesday, we could also sell this today, which is a Thursday. So we can follow that through. Now, if I know Wednesday was a swing day and the market ended up at a high, Tuesday was a swing day, market ended up at a low, then Thursday, today, at a swing hour, at a decent price according to my technical analysis setup, I can say, well, why don't I sell it? And if you take a look, because we want to sell the highs, and how do we know we're at the highs? Because on the weekly chart, I do look at the weekly and the monthly. Okay, this is a place where the market sold heavy before, so I don't mind selling around here if it's a swing day, because we're at the tops and we can sell at a trading hour. Now, if our trading hours are correct, we should be okay. So then I have to check what hour do I have? So let's take a look at the hours for today. Now here we are. Here we are. I think we're going on. Right, here we are. This is Thursday, right? So we've got Thursday hours here. So what have I got? 12:45, 2:45, 4 o'clock, 6:15, 7:15. So there are a few hours here, and as you can see, I've marked them all here. Okay. So why do I need to know these hours? Well, at these hours, if I come to a decent level, on a high level, let's say, I'm okay to sell. And in fact, I've marked in some levels here. As you can see, this is the high of Wednesday, and Wednesday was a swing day, as you can see. So the market did a high here on Wednesday, sold a little bit, and it did not close higher than there on Tuesday. Okay, on Thursday, sorry. Today's Thursday. So we're coming down. So what I'd like to do today is, from the highs, I don't mind selling at the right trading hour, because Wednesday the market made a high, it was a swing day, and I'm okay with that. And my daily technical analysis as well is saying I've got room to come down. This is my PST indicator, where I can spot targets according to my indicator here. Everything has a price. So if the market does go down, I can target 1238 to 1218, which I've already put on my 15-minute chart here today. 1218, 1238 here. So I already know what time to trade, what price range I'm looking at. And if it doesn't match anything, I'm not going to trade it. The same thing is for SP 500. See, these are the hours for today. All right. Now, SP 500, Wednesday was a swing day. On Wednesday, the market came into my price zone, and the market picked up immediately. Okay, and this was today, and I said to the guys, this is probably going to be a sell setup because we kind of reached out, but because Wednesday is a swing day and it's a low, the market will probably want to go up. So I already had the arrows here. Last Thursday was a swing day, market made a high and then fell off. This week, Monday was a swing day, Wednesday was a swing day. So Monday from the highs, market comes into Wednesday. So I said, now pushing this up is okay. So if the market comes down into a decent spot during our trading hours, we're okay to buy. If it doesn't, just let it go. Because we don't need to trade every day. We need to trade when there's an opportunity where price and time are correlated. And if we do that, our trades will highly likely be successful, and we can actually put in a decent lot and make a decent amount. And more often than not, you'll see me also talking about the major levels, like here. Like this was a major zone for us. This was a major sell zone as well for us. And this is before all the tariffs came out. Okay, as you can see, I've got some red trend lines here. They're not your regular trend lines because they're based on time, not price. But in any case, every time we're up here, it's the sell zone. And the tariffs, as you know, came in March and beginning of April. There's a big fuss about it, and all of a sudden markets went crash mode. But they were already going down before because of this timing line I had up here. Okay, so this was already for us a sell zone, and you can see I've got all the down arrows there. You can see I've got 3 down arrows there. All I'm saying, we're going down, down, down. So on all those days, we're looking to sell off, and as you can see, markets selling off and so on in that direction. And I also have these intra-week swing days here, because if the market is coming down, I need to know what day I need to look out for in case the market turns around. So this allows us to really money manage as well. And April becoming a very volatile month with all the fuss and commotion, and I suspect May will be as well. I don't think the volatility is going to be over quickly. Knowing these swing days and swing hours with pricing in advance is going to cut down on a lot of that stress. And the next topic, we're down to poor self-discipline, lack of routine, lack of boundaries. Once again, This is really important because if I don't have a daily routine, I start getting inconsistent. It really impacts our way of thinking, our psychology. It wears us out. It's like draining, it's like draining you. So also here, the main things to look out for is irregular sleep patterns, because the markets are open all the time. Unhealthy eating habits, eating at your desk, eating in front of the screen because you feel like you're missing out. FOMO, I've done a video on that one as well, which is going to really affect your mental clarity and decision making. Also, lack of boundaries. Without clear boundaries, it's going to just consume your life, and trading starts to consume people's life. And this is why there's a lot of drug abuse in the trading industry as well, especially those who are working for institutions as well. So you have to be really careful that your trading isn't really overtaking you. And the reason it overtakes a person is because of this lack of routine, lack of a strategic, solid approach to the market that's consistent. So without these clear boundaries, then all of a sudden you're all over the place, and then you just lose it altogether. And one of the biggest the biggest problem I think in trading is not your strategy, and it's not the indicators, it's not your strategy, it is your mental approach to the market and how to keep that consistent. And developing your strategy to maintain that consistency, I think, is very, very important, so that your strategy can actually be, step by step, and then you can just check everything off and then stay focused. And that's the only way to really go forward. The majority of the problem that we're going through in life when trading is mostly mental, and we need to really overcome that with a sound trading strategy, a good environment, and obviously people you can talk to, like-minded people who you can stay in touch with, touch base with, have a chat with, and also decent money management. Very, very important. Now, this next one is also very important: decision fatigue, constant decision making, because we're always trying to guess the market, even with calculating swing days, swing hours, prices. You cannot guess the market 100% of the time. It's just not going to happen. Okay. The important thing here is to have a strategy which is like practical and powerful. It has to be both. It's got to be practical, it's got to be powerful. And one of the great thing about trading with time and price, with swing days and swing hours calculated in advance, is it's highly accurate, and it is independent from news. Now, with the news, all kinds of news come out during the day. Politicians talk, economic data is coming up, natural disasters are happening, wars starting here and there. Really, it doesn't matter. It doesn't matter, because when we're calculating swing days and swing hours, it's based on natural cycles, and it is completely independent of the news or what anybody else is saying. If it wasn't independent, we would never have these swing days calculated accurately, because the market would be moving according to what everybody is doing and saying. Life is not run by politicians. Life is not dependent on what politicians do. Life has its own cycle. Leaders, rulers, politicians, they come, they live, they die, and the markets, the laws of nature, cycles in life do not change because of their decisions. If that was the case, I'd never get this right, and I'd be going crazy myself. So forget everybody's opinion. Forget the news. Focus on the swing day, the swing hour price correlation. Even when there is news coming out, the swing hours and the swing days can be of great help if you see it before the news or after the news, like we're going to have it today as well. Today there's news coming out. In fact, news was out in Europe and in the US. How could I make a decent plan? Let's do this. How could I make a decent plan in calculating these swing days, look where the market turned off. It's exactly a trading hour, and they sell it off all the way down here. And if we take a look at the hours for today, let's do it and then actually put them in so we'll get something live. Let's do it. Okay, so let's take a look at those hours here. Now this is Thursday. I've just put them in as vertical lines. Now the timing here is UTC +3, right, which is my time zone, and this is how it matches the platform. So now I'm thinking to myself, well, if we're down here at the trading hours, or we're around here, buying may not be a bad idea. If we're down here, if we've closed a gap in trading hours, if we're down here in the trading hours, buying may not be a bad idea. Why? Actually, it's not a bad idea. It's a good idea. Why? Because Wednesday was a swing day. So now the market goes up from my PST pricing off Wednesday on a swing day, and now pulling back a little bit, giving me an opportunity to go in long to the next swing day, which is going to be the Friday, 18th of April. Then I can okay, we can follow that through. And obviously I've got targets, the green line here, which is the high of yesterday. But more important to this, 5,412 is a daily PST level. If things go pear shape, I also have pricing at the bottom here, because if I am wrong, I don't want to be staying in the trade. Okay, so I have a lower range, I have an upper range, as you can see, and from here trading it upwards at a trading hour from this low, I'm okay with, because my stop loss is just going to be below there. Why? Because if my timing and pricing is wrong, I don't want to be in that trade. I don't mind taking a small hit. This is why when time price trading, your stop loss is really, really tight. It is unbelievably tight. Okay, it is really tight. Let's take a look at gold as well. Now this is gold, and I'm looking at gold as well. Now with gold, we had swing day. I think it's going to be tomorrow, right? Let's check it out. Now I've posted the swing days here on the 22nd of March, right? So from 1 month ago, we know what's going on. Right, so gold is Monday and Friday. So let's take a look. Let's take a look at the gold. Now this is Monday. Now as you can see, on Monday the market closed down, but I've put a cross here because that swing day didn't work out for me. Because if I'm up and it's a swing day, I'm looking to sell, okay? But the market sold just a little bit, and on Wednesday it broke out. Am I aware of the breakout? Yeah, because I'm following the technical as well. So I'm not being stubborn just because it's a swing day. Money management is always in place. And if the market is going to break out, I'm out of that trade immediately. So that means that even if I sold on Wednesday, my stop loss is really tight, and I'm not going to be mucking around with it. Also, going against the trend, I always do say in my videos, guys, this trend is strong. If you're going to go against it, make sure you're using a smaller lot size, okay? Because you don't want to be giving back all the gains we did when we were going up. Because with gold, we actually made a killing, okay? All the way from there. Look, this was also a swing day. This was like the week before, coming into there. Swing days from here going up. So we've been really, really spot on with gold. But there will be times when we're wrong. But the whole idea is it's under control. Because if it's a swing day, two things can happen. It's either going to reverse or it's going to break out. That's it. Okay, there's nothing else that's going to happen. If you match it to the swing hours as well, then your stop loss is really tight. Also look at today. I said today, because Friday is a swing day, if the market comes down, we should buy. Okay, so where we're going to buy at what time? Well, I did mention the daily pivot and this white line here, which is 3,299. Okay, so the market didn't come there, it was just shy off. But these are trading hours. Now look at the trading hour. Market coming down, and in the trading hour starting to make that upwards motion. Okay, so if that continues, then we should go into 3,375. But first of all, the high of Asia up here, if it is going to go up into Friday, which is what I'm assuming, because if Friday is a swing day, and if I made that calculation correctly, we should go up into Friday. So buying it on a pullback to go up on the intraday trading hour and pricing is logical. Okay, so when you've got this kind of decision-making criteria in front of you based on time and price, it's a very, very, you really need to be out of order to kind of, make mistakes. So it's very, very helpful when you've got time and price pre-calculated, and with your technical analysis, you understand where you're going. So this understanding is very important. When things come together, that's when you trade, and this really keeps you out of the market. So if I know the swing hours today is going to be for me in the London session at 11:45, this is London, 11:45 morning my time, UCT +3, then I'm not really going to look at the market until pretty much like 11:30 or 11:15, a few bars before the action, because I've already marked the price levels. I'm going to say to myself, well, if it's down at the price I'm thinking about at that time, I'm going to go in anyway. The decision is made. But I'm not looking at it at least until like, 11:30, 11:15, which gives me enough time to relax, grab a cup of coffee, go for a walk, hit the gym or whatever. All right. So getting rid of this stressful waiting in front of the screen is very important. It also reduces your impulsive trading and also your fear of missing out on a trade. And as we've noted here, it gets rid of all the overthinking. You don't want to be overthinking. You want your price and your time correlated with your bias as to where you're going, and that's it. Okay, let's move to the next slide. Now, these two issues here relate to identity and self-worth. Now, when we're trading, especially if you're trading from home, if you're solo trading, this can be a bit of a challenge. Why? Because we measure ourselves on the amount of money we make. And when you're trading, or if you left your job and you're trading, you're constantly going to be comparing yourself to what you used to do in your job, which is what I used to do, compared to what I'm making to trading. Because I'm thinking to myself, well, I've got a certain budget, I've got to make ends meet, so I've got to have a definite level of income, and that was how I was measuring things. But that is not a good way to trade at all. You have to measure yourself according to the long-term perspective of consistency, and success for me is always, what would the bank be giving me for my money as interest compared to what I'm making? And if I'm always beating the banks, if I'm always beating interest rates, secure, 100% secure guaranteed income, if I'm always beating that, I'd say, okay, that's fine, that's great, I'm doing really good. So if interest rates are like at 5, 6, 7% and I'm making like 3%, 2% a month, that's already huge compared to that annual interest rate of 5, 6, or 7% or whatever you're getting. Okay, so don't measure yourself with respect to how much you're making, but the consistent increase in your account with respect to something realistic. Also measuring yourself to the performance of the SP500 is not a good idea, because SP500 can crash, like we had a bit of a crash right now with all the tariff deals. It can crash. So even if the market is going bad, you still need this consistent approach where you're making money. This is why timing is important, because if you bought something, knowing when it can turn in the future, the day, the hour, the price is also very important. So having that vision is already really important for your risk management. Okay, because nobody other than you with a high level of probability will know when the market's going to turn or stop, when it's going to stop even during the day. For example, if we look back at the chart, if the market is going up here, right, this is an intraday trade, so let me get rid of this Fibonacci zone here. All right, if the market, let's do this, started to go up at a trading hour. Now you know the next trading hours and you know the next price level the market can come to. So if you were long here on this intraday trade, you already like thinking to yourself, okay, we're the trading hour, the price is here, so I need to cover the trade. I need to manage the trade. Now you're not just managing it based on price, but you're managing it based on time. Who can manage that? If you know the next trading hours, the next possible swing or breakout hours, you got a much better advantage because first of all, you're relaxed. The reason is if you entered the trade at the right price at the right time, let's say you entered at the 12 o'clock bar or 12:15, your next session is 2:45 to 3:45. It's that 2:45 to 3:45 hour gap. So you're thinking to yourself, well, in that 1 hour gap, if I'm hitting a price, I'm going to take profit, or I'm going to move the stop forward because it looks dodgy. Okay, but what do you have? You got price and time. So you are not stuck in front of the computers going, oh, what are the prices? The ticks are going up and down, up and down. You don't have to. Time correlation is the most advanced and amazing way to trade. It really, if you think about it, knowing the hour to look at the market is just a blessing on its own. And this is like true for anything you're trading. Okay, so let's take a look at the next slide. But before we move on, the imposter syndrome. Now, because we're starting trading, or you started trading not as a trader or not as a finance professional, then you might think to yourself, oh, this isn't my job. What am I doing here? And so on. Well, look, in the 21st century, everybody's changing professions. I'm a finance professional, but I wasn't in the financial markets doing it, So you can change profession, you can learn new things, and this imposter syndrome, you see it often on YouTube when people are like changing the way they do things or changing a profession because we feel like it's not me. But it's not you if you're not learning. You have to make yourself something. Also in life, when we start any career, we're not born into a career. We're like, learning, getting an education, growing in it. We're like cooking in the business, aren't we? We're learning as we are doing. So trading is the same thing. You first have to learn. You've got to cook a little bit. And then you got to kind of build that confidence and that strategy and the money management and your style and your consistency. It's not going to happen overnight. And a lot of people, when they get a string of losses, they immediately fall into this trap, starting to define their self-worth. Am I ready for this? Can I do this? They begin to have this self-doubt. It's because of the lack of training on the job. You've got to trade. You've got to train yourself on the job, and you really have to learn by doing. Trading is something that takes time, and it is, it's like any profession. There's not going to be an easy fix around this until you settle yourself down with your analytical approach, your strategy, and your money management. It's just not going to happen. So give yourself the time, the practice, and don't rush into it. Definitely don't leave your day job. Okay, I didn't do it. In fact, when I left my job, it was 2005, and I gave myself a year before I left work. Okay, and since then I've been doing it. Also, if you check my YouTube channel, it's relevantly new. I've been in trading since 2005, but YouTube-wise, I'm only active now because I'm also bringing out the fintech as well. So we can actually develop the fintech software for timing the market for any asset. That's the whole idea. Otherwise, I wasn't really doing any promotion or any YouTube videos or anything like that, except for, like several members that we had based on time and price trading. But let's take a look at the last one. I think we've got, yes, number 9, the constant learning pressure. Now, this is a lot of pressure on everyone, staying updated and fear of falling behind. Now, I've overcome this with time and price. Before that, I was always thinking, there must be something else I can do. there must be another indicator, or the holy grail syndrome, always looking for that next indicator, looking for that better way so that I never lose money. It's not going to happen. It's not going to happen. But staying up to date is okay. Looking at new things is okay, but it shouldn't get to you. It shouldn't overwhelm you, because at the end of the day, what are we really doing? We're looking at price levels where the market bought and sold. We're matching a swing day, matching a swing hour, trading with money management. That's it. And really, as I trade more and more with time and price, what I can see and what I've been seeing for years is that this is, like I said, independent of news. It really gives you the opportunity to trade in a way where you're just like independent from news. You don't have to follow the news. So there's no falling behind. There's no being on the edge all the time if somebody's going to do a tweet or not. The other day, actually, I saw a nice tweet. In fact, let me share that with you. It was quite nice. All right, this is on x.com, and this is it. This is Michael Burry's post. I reposted it on mine, and it says, your technical analysis, this is Trump obviously, is no match against my tweets. And I made a comment actually on Michael's post. I said, listen, if you know the swing days, swing hours, then you're not going to be, here's the comment as well, pre-calculated swing days and hours have proven to be Trump proof. So I've done that as well, and the reason is it really is Trump proof, because I could not come up with swing days. If you think about it, this is 7 to 11 April, post them on the 22nd of March and come up with these hours and still feel confident with it. Okay, so this really is a way to kind of like stay relaxed and with proper technical analysis and money management. It's a trading opportunity where your level of success in trading in percentage wise can be really high, and because your minimum risk is really tightly measured, it's a really minimum risk, the maximum profits are quite amazing. So there's no fear of falling behind. Once I've discovered time and price correlation, like this is it, because what do we really need? We need something consistent, which is independent of global events. So I just trade the swing day, swing hour, and a price, and that's basically it. So all this chasing around all kinds of indicators and all kinds of, magic pills and potions for trading just doesn't matter anymore. Keeping on top of the game is great, and I am trying to build a software for it. Why? Because the things that I'm doing, calculating, is all done manually. In fact, let me show you. As you can see, this is the mother of all books. Okay, and in here I've got all the calculations and stuff for like days and days and days, and I've got another big one here. This is for the previous years here. It is all like manually done, so I'd love to put it on a software, and this is why I had the idea of turning it into a fintech as well, so I could get the software done. So it's quite complicated software, and it's going to require a team, and that's the whole thing behind it. But at the end of the day, guys, these 9 things I went over today are really problems at a personal level, individual, psychological, personal level problems that we all need to address as traders. And really, I've been through all of them. I can really say there's no wiser than the experienced, and really these are all problems that we go through as traders, especially like if you're trading from home on your own. So having the environment around you, like-minded people, having a decent strategy where you're kind of like not constantly thinking about the news and who said this and who did that kind of stuff, and just focus on your pre-calculated ways with pricing, kind of like shut the world out. Don't listen to anybody's opinions. Just do your thing with time, price, money management, and it just works out really good. And it's actually a really light-hearted feeling when you're kind of like independent and you don't have to worry about anybody's talking, anybody's opinion. Before, I used to listen to Bloomberg all the time, you know, like, oh, who's talking, who's saying what, what's going to happen, this and that. And then I discovered that, hey, listen, these swing days are independent, it doesn't matter who talks, these swing days are highly likely going to work. And that was it for me. It's like, shut it all down. The only thing I'm looking at now is the economic data, and the reason I'm looking at it, let's put it up here, that's ChatGPT. Let's bring this to the home page. And the only reason I'm looking at it is to see if there is news today which is going to correlate to the day. And there is. So 2:45 was pre-news setup, 4:05 is post-news setup, and that's it, basically. I hope that makes sense. So I'm not really following the news, but this is really good to kind of like correlate, and then you can match it. You know, you've got a news day as well. Oh, great. And it matches your swing hours. Bingo. That's the time when the market's going to turn around. It's going to move. You can use it as a trade. Righty, I hope this mini series of trading problems helped. This is the longest video because I had the most important topic saved for last. If you enjoy reading, feel free to go to my website. I've written a lot of articles. And here, this is my website, globaltrader.club. And there's actually an article for every part of that mini series. Also, there are a bunch of articles you'll probably find interesting if you enjoy reading anyway. If you like reading, let me bring this out a little bit more here so you can see. If you enjoy reading, there are a lot of things in there I think you can read, and that's, I've been writing articles for like quite a while. Okay, and if you want to subscribe, you can subscribe at the bottom to my newsletter here. I don't send a lot of newsletters, maybe once a week, or sometimes not even that, but that's yeah, if you like reading, you can catch up on that. If you like what you saw, if you thought the video was helpful, I'm glad it helped you out. The important thing here really is to kind of adjust your trading approach, make it consistent, and just go with that consistent approach, and pretty much just close yourself off to all the other influences that might blur your mind. And if you have a good environment, like-minded people around you, if you've got traders, like friends who are trading as well, might be a good idea to get together with them. This is the whole idea. Actually, I put the club together as well, so that people can come together and they can bounce off ideas and ask questions if there's anything they're like not sure about. Because having people around is also this extra psychological support. It gives you confidence as well, and it stops you from doing silly mistakes really. And that's basically it. Also, if you're interested, I've done a free PDF you can download here at stan.store globaltrader.club. This is free. It's about time and price trading, how you can match it together here. As you can see, there's a mini course there on there. My coaching is not suited for everybody, but if you're interested in time price trading, the first thing to get done really is your technical analysis. And if you want to use time and price, you can also join the community and see how you go. And if you have any questions, queries, shoot them through. I'm more than happy to help. In the interim, this is the final video of the Trading Problems mini-series, but I've got another one planned, and I'll see you on the next one. Have a good day.